On the surface, America looked unstoppable. Cities were expanding toward the sky. Steel towers climbed higher every month. Highways stretched farther than ever before. Factories roared day and night, producing cars, radios, and machines that promised a modern future. The country felt like it had entered a golden age of prosperity. The stock market seemed like a money machine where ordinary people believed wealth was just a few smart investments away. Taxi drivers were giving stock tips. Barbers were talking about market trends between haircuts. Office workers, farmers, and shopkeepers all believed they had discovered a shortcut to riches. Everyone felt like a financial genius, but beneath that confidence, the system was rotting. For years, banks had been handing out loans carelessly, eager to profit from the boom. Investors were buying stocks with borrowed money, a practice called buying on margin. It meant people didn't actually own the wealth they claimed to have. They owned risk, hidden behind layers of optimism. And risk was piling up. Stock prices kept rising, not because companies were stronger, but because people believed someone else would buy at a higher price tomorrow. It was hope stacked on top of hope, a financial illusion growing larger every day. Newspapers celebrated record highs. Success stories spread like wildfire. Doubt became unfashionable. Then came October 24th, 1929. Panic didn't arrive with a loud warning. It began quietly, a sudden wave of selling. Prices dipped. Investors got nervous. Phones rang across Wall Street as brokers demanded more money to cover loans. Voices that once sounded confident now trembled with urgency. But people didn't have the cash. By October 29th, later called Black Tuesday, the illusion shattered. Millions of shares were dumped onto the market. No buyers, just sellers. Desperate, frightened, trapped in a system they no longer controlled. In a matter of hours, fortunes disappeared. Life savings evaporated. The market didn't just fall. It collapsed under the weight of its own greed and speculation. Banks weren't safe either. They had invested depositors' money into the same fragile system. When the market crashed, trust vanished overnight. People rushed to withdraw their savings. Lines formed outside banks across America, stretching down streets in tense silence. But banks don't keep everyone's money in their vaults. One by one, they failed. When a bank closed, families lost everything: homes, businesses, futures. There was no insurance, no protection, just locked doors and shattered lives. The shockwaves moved from Wall Street into kitchens and living rooms. Unemployment exploded. Factories shut down as demand vanished. Farmers couldn't sell crops. Prices fell so low that harvests rotted in fields. Bread lines stretched through city streets. Proud workers who once built America now stood quietly, hats in hand, waiting for food. This wasn't just a market crash. It became the Great Depression, the deepest economic collapse in modern history. A crisis that crossed borders, affected millions, and changed how the world understood money, risk, and responsibility. And here's the terrifying truth. It wasn't caused by one event. It was a chain reaction of human behavior: overconfidence, easy credit, blind optimism, and a financial system built without safety nets or strong rules. People believed the boom would never end. They mistook rising prices for real wealth. They trusted a system they didn't fully understand. History showed a brutal lesson. Markets don't collapse in a single day. They crumble slowly, while everyone is busy celebrating. The 1929 crash reshaped the world. Governments introduced regulations. Banks were forced to change how they operated. Safety systems were built to prevent another disaster of that scale. Financial oversight became stronger, but the psychology that caused it, that never disappeared. Every generation believes it's smarter than the last. Every boom feels different. Every bubble looks like opportunity, until it bursts. And that's why the story of 1929 still matters today. Because financial collapses don't begin with numbers. They begin with belief.